It's an election year. How is that going to impact the stock market? And how does the result of the election impact the way we trade? Let's look at seasonality and the election today on the Weekend Review. Okay, let's talk seasonality and the stock market. First, we're going to take a look at the market here as we've been looking at it for a little over a year now. Red line is S&P 500. Purple line here is its 200-day moving average. As of right now, we are on all-time high watch. And if we close where we are today, right now, this is Friday at noon, 12:30 pretty much, it'll be a new all-time closing high for the S&P 500. I think we get it today. I think it's finally time. It looks like the market wants to go that way. It's an options expiry day today, so we're going to see a little bit of excess volatility, but I think we get a new all-time closing high today. If not, we're knocking on the door. We're going to get it pretty soon one way or another. But let's look at what we wanted to talk about today, which is election years. So what I'm showing you here on screen is the S&P 500 election year seasonal pattern from 1949 to 2023, where we are today. There's a whole bunch of lines on this chart, but we're really going to focus on the black line, which is all election years together, and the green line, which is the sitting president is running. We have an incumbent president running for election. And what's amazing about this chart is I didn't know this chart until I found it, but if you would have asked me what election years were like, I would have said, well, they're pretty bumpy in the early part of the year, and they're bumpy again as we go into the election, but then after that, there's typically a lift to the market. That's what I've been saying for years about how elections go. It was based on my personal experience. What I love is now that we found the data, we found the aggregates, we found the timing, all the rest of that, and it corroborates what my lived experience has been. So now I'm really inclined to believe this chart. One note about seasonality. Seasonality, it's not... Seasonality is not like the total predicted truth. It's not gospel truth. This isn't exactly what's going to happen. Seasonality can be a little weak at times, and particularly for something like this with election years, we don't have a whole lot of data points to go on. So if something wildly different were to happen, I wouldn't be surprised, but this is the pattern for election years. If we look at all years, this black line here, we notice in the early part of the year, we have a little bit of weakness, if not a little bit downward bias towards the market, sometime in March and April. We get a little bit of a lift, but it's pretty weak, right? By the time we get into September, October, and November, we're only up 2-3% for the year. So it's a pretty poor year. Then we have the election, and then there's a lift that puts us into what's more normal returns for the market, 6, 7, 8, 9%. And when there's a sitting incumbent, which is the year that we have this year, assuming Biden runs, I guess, you know, who knows with politics, but assuming he's the nom and he's running, green line here, this is for a sitting president running. And what this shows me is basically it sort of exacerbates the entirety of the move. So the highs are higher, the lows are lower, there's a lot more volatility. So what I am anticipating going into the election, it's going to be a roller coaster. What does this mean? This means you've got plenty of spots. We really don't want to chase here. We want to be very cautious. We're going to play some pretty tight poker, at least until we get into the election. After that, hey, it's a pretty good experience after that. And you'll notice in the incumbent years, tends to be stronger years in general. The green line is above all the others, and it tends to lift pretty strongly after the election as well. How about the outcome of the election? You know, what does that mean? Well, here's presidential election years throughout history. This is 1928 to 2019. And it basically shows you all election years. So this is what we saw previously. And then what happens if the incumbent wins or if a challenger wins or a new president is elected. So there could be some years where we don't have an incumbent running. And what you notice here is, first of all years are pretty good. So this is why we want to remain invested this year. It's pretty strong if the incumbent wins, but we want to be careful not to be fooled by the data here. So no, the stock market doesn't have a Biden bias. The stock market really doesn't care, Biden or Trump, assuming those are the nominees. The market doesn't care one way or another. The way that I interpret this data is that in general, the economy is probably a little bit more dynamic and probably a little bit rougher in those years where we're electing somebody new. That would include years where an incumbent loses. And that's why you notice returns are a little bit lower here. And typically, if the incumbent wins, that probably means that the economy is strong, conceivably, and so that's why returns are higher here. But overall, if you wanted to know how the election impacts the stock market, I think our key points are it's going to be a little bit of a roller coaster in the early part of the year. After the election, whoever wins, there is no Democrat or Republican bias to the stock market. The stock market's going to lift. And whether the incumbent wins or the challenger wins, I think either way, we're going to have a pretty good year. But we want to be careful of that volatility in the early part of this year. That's what I'm thinking about. That's how we're going to be positioned. I'll see you guys next week.